So let's just have a quick look at the implications for asset classes. Cash. If you think about it in cockroach portfolio terms, then the highest quality cash asset is gold. Why is gold the highest quality? It's basically the only monetary asset that's no one's liability. 3,000 years of history. It actually has served as money. It's no one else's liability, and I think it has all the quotes that Alan Greenspan that Prashant presented. It really is, in my opinion, the currency par excellence. Okay. If you look at bonds, you want to make sure your bonds, are net creditors of sovereigns or corporates. And I think the analogy in India would be that we would want to make absolutely sure that you're holding bonds of companies that are actually providing a useful service, right? So, in my opinion, if you hold an Andhra Bank deposit, chances are you're going to be, much more at risk than if you own, let's say, a Power Grid bond, or a railway bond, for example, right? That, come what may, the railways are going to have to function, but does Andhra Bank need to function? I'm not sure. You can wipe out the equity and it's not going to create a systemic problem. In terms of equity, we would say that you want to basically own only high quality equities. And again, sound business models and balance sheets, I don't know whether I want to have 60% of my portfolio in Astral, Poly, or whatever it is. It might be a perfectly good company, but I'm not sure about it. And then in terms of real estate, you want to have location, location, location. So I think, in order to be safe, you need to be at the highest quality end of each asset class. That if you're a long-only investor, that portfolio declines relatively the least. And by the way, if everything goes down by 99% and your portfolio goes down by 50%, guess what? You've actually done really well. Because ultimately, the reason why we actually invest money is that we want to preserve our consumption power over the long term, right? And so, if everything goes down by 99% and, whatever asset you invest in only goes down by 50%, you've actually come out 49% ahead.